Good morning, everybody. Well, not really too good of a morning for many people, especially myself. We are rug pulled. We have woken up this morning at a 5 a.m. with the CPI report coming from the EU, and it was higher than expected, 10.1 versus 10. Everything is down. All the report is fantastic as far as everything being lower, but they missed the expectations, and the market has gone into that rug pull. Back on December 5th, I was talking about the limited upside and how everything was working out there. We were looking at an A and then looking at a B wave down. And then from that B wave down, we would get that much larger C wave to the upside. Even shared that a lot of my very bullish uh, chart colleagues were all looking at the same thing. And I was seeing an opportunity that would not come through. Uh, Again, the two alternatives that we were looking at. And again, because we never broke that 41.15, 41.18, it was very suspicious. Well, we've obviously had that proven here over the last couple of days, but overnight, we were looking pretty well. We were hanging there at 39.30, hanging just below that 200-day moving or the 100-day moving average, resisting right at the bottom of that support level that we had going back for 25 days. And then 2 o'clock in the morning, when the EU got started, everything just started to melt down. And the report came out here at 5. Bang, we came down here to the 50-day moving average over here on the ES. I will break this out for you a little bit deeper to give you a better idea as to what we're looking at here, because we have an extremely oversold 4 hour, almost to the extent of what we had as we were heading into that December 6th, December 7th level when we broke down to that 39.18 and put in the lows for December. We've obviously extended that extremely here as far as price goes, but this did look as if we had fulfilled the move to the downside here, how we had an A wave down, a B wave up, C wave, right to the 161.8 extension, right below that 39.20, 39.30 support level. So it did look as if yesterday was a big punch in the face, but don't worry, because it's only about the $4 trillion of options that are expiring today, with it being OPEX. And as I had shown with that research over the weekend and during the beginning of the week about Santa Claus and the pause, that we should still be looking up into that highs of the year, or sorry, highs of the month coming as we go into the final 2 weeks of the year. Well, one thing that is definitely showing on that is the VIX. This is the VIX with this massive move that we've got to the downside here. Here's the VIX. You got a 300-point move to the downside over there on the ES. And you got your VIX hanging here at this 2371, right where we were over here back on the 13th. You know, the VIX is undoubtedly saying, yes, Tim, you're right. This is a punch in the face, but you are going back up to that 4,100 level as we go into Christmas. But as of right now, it definitely doesn't feel like that for a lot of people. And bring you back here to Apple, like we kept saying, look at Apple, watch Apple, watch Apple. Apple's completely filled that CPI gap from November. So I mean, here we are. We are right down here on major support levels for the number one stock that's out there in everybody's holdings. So again, as shitty as this all looks, I still say you've got that situation where we're here. We've put in a very quick, very fast, just like we had over here back in October into November, a very quick move to the downside. And now it's the process of replacing and repairing it and working back upwards again. I posted over there in the alert room that if we do open green today, get out of the way. You've got until about 10 o'clock in the morning to really recapture that green and fill this gap. If you can get back up above that 100-day moving average over on the SPX, if we can get back up above that 100-day moving average before the EU closes, No question whatsoever, Santa Claus is here, and we are going to be looking up into this 405, 410 area as we go into SPY with, actually, we'll bring that up since we're here, and why not? You've got your gap down on SPY from the obvious OPEX. Here's your move that you've got on SPY from 414, which I still say needs to be repaired. How we get up there, how quickly we get up there, how we repair that and move up there, I can't go through that, but I will bring you here that we have made perfect contact right here with the 2000 with the 23.6 retracement going to the 2009 lows. That is a value buy spot for algorithms. You have everything in your advantage to be looking for upside from here. And if we fill this gap before we open up, again, watch out. It looked bad, but it's not as bad as it feels. See you guys in the chat.